Welcome back to another Tradeouts technical analysis tutorial. This is the 6th video in the introduction to range trading, and this is going to be a very short one, hopefully. But we're going to talk about range break targets, or otherwise known as measured moves. Really helpful information to help you identify potential targets if indeed the range breaks. Let's get to the video. So we're going to get right into it. We're going to start with a blank Bitcoin chart and just quickly go over and identify some recent ranges that we've been trading in. And again, using measured moves to help you identify potential targets once the range does break. So I know a very clear, definitive range for sure was this one. It's a very nice range here. Just give me a second. I will mark it off for you. So here is your range high, followed by your range low. Got that marked off all nice. Again, nice range. Obviously, like if you've watched the first 5 videos, you should definitely be able to identify this range yourself. That's why I'm not going to, in order to keep the video short, I'm not going to go into what makes it a range because I've done that in previous videos. But the important part, one of the important parts is if your range does break to the upside or breaks to the downside, how do you know, or like how can you get an idea where the extension of that move will take you? So here's one way to do it. All you do is take, and again, I just use a trend line. I mean, you can use whatever measurement tool you'd like. But you literally just go from your range high down to your range low. So it's the width of your range. And you can use this, so you see how I move it. In this case, the range obviously broke to the downside, right? So we're gonna do the downside first, but we can also do it. We could do an upside target. And the most important thing I'm gonna say is that don't rely on this measured move as your sole target. Like, okay, this is the measured move that I'm seeing, like that's what I'm going to target. No, like this is an excellent form of confluence. If you have other levels, so let's say you have maybe you have a weekly level, monthly level, maybe you have a Fibonacci retracement lining up at a specific point. Maybe you have, a slew of other indicators or technical analysis tools. Again, that like you have other levels. What the best way, in my opinion, to use this measured move is, again, to, is to make sure that you have confluence with other regions and don't just rely on this solely because it's not perfect. But it often is pretty accurate. So anyway, obviously we broke the range to the downside. So all you do is, again, take the measured move here that we did. Oh my goodness, hold on. And that's pretty close, right? So again, here's where we broke down. I'm just putting it over here so that you can see it easier. And then again, as you move price over, try to get it framed in there correctly. Again, we drop down, and ultimately the bottom wick of this move is very close to your measured move. To me, that's hit. So again, if you have other indicators, other support levels, which there is here, I'm not going to get into that, but there was definitely confluence within this region to have a bounce here. But there's your measured move. So we broke to the downside of this month-long range. Your measured move simply by taking your range high to your range low and then dragging it over to the breakdown point, which is here. So again, you see range low, test support, and then finally it breaks to the downside. So now you've left this month-long range where you headed. Here's your measure move, which ultimately obviously got hit completely. So even if for some reason you didn't take profit here, but again, like there was other levels to definitely be aware of that we came into. So a bounce here wasn't surprising, but again, ultimately the perfect measured move did get hit, and then actually had more continuation. So you can use this to the upside as well. So let's pretend that, again, like maybe you had this, price came back up, chopped around, and then ended up breaking to the upside. All you do Let me mute that for a second. All you do is take your same measured move and move it to the top side, wherever your breakout point is. And there's a measured move. If it broke to the upside, you could have been looking for around 58K. So around $58,000, which is interesting because, again, the previous point of breakdown here, and there's definitely other confluences within this region as well. So that is one range on its own. So I'm going to delete that. There was actually a pretty nice range here as well. Try to get like the best. It's crazy. It's like straight down, so it's like not giving me. There we go. Just do it this way. Same thing. So I like my range high here. Worked out very nicely. Deviations, for those of you who watch video 5, we already went over all this. And then my range low, swing player pattern, you get the point. Again, if you've watched all the previous ones, we already talked about all of this. So again, you have a clear definitive range high, worked out very nicely. Even this push up, came back up to test it, and then new lows. So measure move, we're gonna do that one more time. Taking it from your range high to your range low, just measuring the distance. And again, it doesn't matter which direction you pull it. I'm gonna bring that over here, try to line it up as best as I can. It doesn't have to be perfect. Right here to your range low. If we zoom down, it's about where we stopped. So a little crooked, that's okay. But again, where we broke down from this range, measured move, look at the bottom of this wick here. Again, price is sliding, catches a wick here. And then again, we ultimately got continuation to the downside, but the measured move of this range had been hit and pretty nice, like quite nicely. Again, like pretty, did a good job. So like if you're shorting the breakdown here, again, this gives you an idea of where you might be able, again, like if there's other technicals lining up in this region, you definitely want to have confluence for that. But just to give you an idea of a potential target for as far as this range breakdown goes. Same thing to the upside. If this had broken to the upside, then you could have possibly been looking around 46K. Like what, 46,600, something like that. But again, you get the point. Like this is about where you would be looking to the upside if this indeed broke to the upside. That's a second example. Let's kind of zoom out here. So we did that range, we did this range. Kind of zoom in for another example. So like I see a pretty decent range here, which I remember trading this. Let me actually go to like a 4-hour. Maybe this will make it a little bit easier. Okay. I see like a pretty nice range here. Range high, a little bit of a deviation. I like that. And then I like this as my range low. Okay. So now you have your range high, your range low. The funny part is you actually had, again, like it broke to the upside this time, but then came back down within the range and really couldn't hold any of these levels. It just continued lower. But same thing here. So basically, and honestly, you probably could drag this back a bit more as well, but I'm just going to keep it simple for here. Same thing, right? So here's a pretty decent range. I'm going to draw my measurement. And you saw how quick I did that. I mean, like you can go and identify these. It doesn't take that long. But like the point is, if you're able to identify ranges early as well, which is what we've really been focusing on this module, is like the ability to identify these before they become extremely well developed, right? I guess that's another point that I'm going to make too, is that for these measured moves, I really prefer for the range to be developed. I think they're more, you get more accuracy the more developed they are. If they're newer ranges, typically, I mean, obviously it could still work out okay, but I really prefer like mature ranges, which like for whatever time frame that you're trading on. So it's going to be relative to whatever time frame you're trading on for the most part. But I mean, especially if you have a range on Bitcoin or whatever it is you're trading and you're literally in there for a month, 2 months, like that's a very mature range, right? So like using measured moves off of ranges like this, I think are a bit more valid. So this broke to the upside. I'm going to take this. Again, you saw how I did it, range low to range high or vice versa. It doesn't really matter. But you get the point. Again, nice measured move up to the top. On this candle, you actually got again, like a perfect wick, a little bit of a rejection off of there, and then ultimately, you know, we did push up a little bit higher, but like the bulk of the move was represented pretty nicely within this measured move, which took you to new all-time highs, by the way. And then to the downside, so again, like if this range had broke to the downside, which technically, you know, you came above the range, then you fell back within it, but you really couldn't hold range very well and continue lower. You had moved this to the downside, just to kind of give you an idea. It's pretty close. Look at that. That's pretty close. So isn't that interesting, right? Basically the distance, the width of this range, your range low and range high, when you have your breakout, I feel like that did a relatively good job. Again, like pointing you in a good direction as far as the, you know, how far price would go. And again, it doesn't mean that it's going to come up there and then stop and then reject everything. It just gives you a target. It gives you a target, especially again, if you have confluence there, that's going to be really helpful. But then here, break to the downside, your measure move to the downside is almost perfect. And then that's where we found a bit of reaction, came all the way back up to retest your range low and actually formed a range here. Pretty nice range. Again, it did form a new sub, you know, this isn't a sub range, but like it formed a new range here before you had like the ultimate breakdown. So that's basically it. I hope that gives you an idea, again, of just being able to look at measured moves for ranges. And, you know, again, the maturity of the range I think is important, and it's going to be relevant to the time frame that you're trading. But you know, the main thing that I want you to take away from this is, again, how to do it, right? So showed a couple examples of that, but remembering that it isn't the end all be all. Like just because you have a measured move of any formation, which by the way, I was going to save this for its own module and just show you like measured moves of different formations that you can trade. But I thought it was more relevant to actually do it for, you know, basically do it for this example. And obviously, you know, again, like ranges that are more rectangular, I guess that's an important point. Like ranges that have like a more rectangular shape to them are definitely like, again, like they're better. I think you get much better, higher accuracy measure moves based off of that. And but again, the main thing is confluence. Don't take this measure move for, you know, like just because you have a measure move that's your target. Like you want to have other reasons that are lining up with this. This is definitely not my number one. Like just because I have a nice measure move of a range, for example, this is not like my number one, you know, piece of confluence on the ladder. This is probably like 3 or 4, but it's a very powerful one. Again, if you have other reasons to see specific levels that are lining up together, having a measure move there and having it align with those levels is incredibly powerful. So that's the point of this video. But with that being said, you know, if there's another video that needs to be made on this, happy to do so. But wanted to keep it short, and hopefully it was helpful to you. Trade safe out there. We'll see you on the next one.